A CPA stands for Certified Public Accountant. So I'm an accountant that works in the public, for the public, and I do all kinds of accounting services that individuals and businesses and corporations and partnerships and many different types of entities that need accounting services. I became a CPA after going to college and getting an accounting degree, which is required to become an accountant. You need a certain number of accounting hours, collegiate hours, to be able to sit for an exam. You have to pass an exam to become certified. Even though you have a degree in accounting, to become a CPA, you need to pass an exam. You also have to have experience of working under a CPA before you can take the exam as well. It is a very rigorous exam. In fact, it takes over 2.5 days to complete the exam. It has 5 different parts of the exam for different subject matter. You have to have a passing grade of 75 or higher to pass each part of that exam. I work for myself as a public accountant. I'm just a sole proprietor that works for individuals and companies and corporations that need accounting services that come to me. So I don't get a salary like some people do that get a W-2. I have to work for individuals and then get paid by those individuals. Depending on the time and cost that I have and what I can bill to the customers based on those hourly rates or costs that I incur for different services. There are CPAs that do work for different companies in their accounting departments. So there are accountants that work for companies. If those companies would rather have an individual working for them to do their accounting services rather than go pay a public accounting firm like mine to do accounting services. We do bookkeeping services to keep up their books and give them financial statements based on what their business is doing. We also do different tax work for payroll taxes and take care of their payroll needs as far as filing quarterly reports and annual reports and printing out W-2s at the end of the year. Many different things that we do. They can also do some of that in-house, and then we can fill in and do their income tax needs, services, those type of things as well. So it's pretty simplified as far as what we can do about any accounting service that the company or individuals need. The question on getting a CPA to file your income taxes versus doing it your own, I would say if you were very simplistic as far as your information of filing a tax return, if you just had one W-2 and maybe some interest income on a savings account, those types of returns would be very easy for you to file on your own rather than going to CPA, which you still can do. Of course, it's going to cost you a little bit more than having to go online and filing. A lot of times the reason they come to a CPA is if they may have deductions, if they may be able to itemize, or questions about whether certain things are taxable or not. Usually that's when you get into the needing a CPA to be able to answer those questions and to be able to help you decide whether or not you need to get additional help in filing income taxes. Because once you get to buy a house and have interest expense and property taxes and charitable contributions. Those type of deductions could make a difference on your income tax liability, on how much you pay, and you could save income taxes sometimes, unless some of the programs now are pretty good about asking you questions on whether you have these type of deductions or not. So a lot of times these programs and online services do a fairly good job of asking, and so that you can then input that information into the program to save you some money. Lot of the tax prepares that we do is for people that have their own businesses that pay tax on the net income of their business rather than getting a W-2 from an employee. So that can make a big difference on whether or not they owe taxes or not, based on what their net income. The businesses pay tax on net income rather than the amount that they collect. So that could have a big emphasis on whether or not somebody brings their taxes to a CPA. We do a lot of farmers returns, which is pretty difficult in knowing exactly what some of the income and expenses are, depreciation on equipment. There's lots of different tax incentives for that, and being able to get the best deductions in order to minimize the tax liability and how much you pay in income taxes. The basic form for individual income taxes is Form 1040. Some of the forms that are needed in order to file those taxes, if you are an employee of somebody else, then you need a W-2 form that they send you or give you for the year's total wages that you earned. Some of the numbers on that W-2 is gross wages that's taxable. There's income taxes that they withhold out that you've already paid in, so that would reduce the amount of your tax liability. So if your liability is less than how much is withheld, then you get a refund. If your tax liability is higher than the amount that they've withheld from your paycheck, then you could owe some more. Some of the other items that's on the W-2 as well is Social Security and Medicare tax that they withhold out of your check. 6.2% of your wages is deducted for Social Security tax. That amount is paid in under your Social Security number, and then whenever you reach the age to be able to collect Social Security, then that's calculated in on how much you'll get to receive once you are retired. They also withhold the Medicare tax, which goes in to cover Medicare costs. That's 1.45%, so that's 7.65% total is withheld for Social Security and Medicare out of your check. One of the things too also is, if you're an employee, is that your employer matches that number and pays in an additional 7.65% on your behalf. So that amount doubles based on your wages. They could also take out state income taxes, because you'll have to also file an Oklahoma income tax return as well. It's based on the numbers from your federal return come over to your state tax return. So the same situation on the state withholding. If your state income tax liability is less than how much is taken out of your check, then you'll get a refund. And vice versa, you would owe more if they didn't withhold enough. The Form 1040 is your income tax return form that is sent in to the IRS. The W-2 is what is also sent to the IRS to tell them how much your wages are. So one of the things they do is they'll compare what they've received from your employer to what is reported on your income tax return. So any tax form that you receive, whether it be from your employer, from the bank on interest, or 1099s, forms of all types, all those forms are sent into the IRS. So their computer already knows these numbers. So it's very important whenever you file your taxes to be sure to input the information from all 1099 W-2s on your income tax return. Otherwise, the IRS will send you a letter and say, we have figures that are different that have been reported to us than what you've reported on your income taxes. So if you don't file an income tax return, then you'll receive a letter saying, we have been received information of this amount and you owe us this much. So they're not going to try to calculate the lowest income tax liability for you. They're not going to ask you for your deductions if you're not going to file and take those deductions for yourself. So it'd be encourage you to be sure and file an income tax return if you have the income that you would need to require to file a return. The tax brackets for the federal tax is based on a graduated scale based on the taxable income. There are certain deductions that you're allowed after your total income. There's a standard deduction. And so even though you have total income from your W-2 and interest or other income, that may not be your taxable income. Once you follow the Form 1040 and deduct the allowable deductions to come up with your taxable income, then the tax rates are based upon that number. The lowest tax rate is 10%. That's on any taxable amount up to $14,100. Then if your taxable income is more than that, then you go up to the next tax rate. You still pay the 10% on that first $14,000 up to $14,100. The next tax rate level goes up to 12%. That's on any taxable income from $14,100 up to $53,700. So you would pay 10% on that first $14,000, then 12% on the next number above $14,000 up to whatever your taxable. If your taxable income is higher than $53,000, then your tax rate goes up to 22%. So that 22% is calculated then from $53,000 up to $85,000. And if your income is higher than $85,000, then you go up to the next level, which is 24% on any amount over $85,000. So technically, you'd be paying 4 different tax rates if your taxable income was above $85,000. But that's better than one higher tax rate on all of it. So that's a little bit cheaper. But that's how the tax rates are calculated for 2020. There are also different rates for the different filing statuses. A single, married, filing jointly. Head of household is if you have a single individual that has a dependent child, and also you can file married filing separately. So there's different rate schedules for those 4 types of filing statuses. But it's pretty close as far as the rates. It's just a little bit different on the maximum wages, which would be taxable. Some of the most common questions that I get are whether or not some items or monies that they collect are taxable, or a lot of times gifts that they receive from parents or families, or whether those gifts are taxable, and no gifts are not taxable. So some of the others are deductions, certain deductions, whether they can deduct items or not. And probably one of the most funny is whether or not their dog can be a dependent, which is no. You have to have a social security number in order to be a dependent on somebody else's tax return. So dogs and animals are not dependents on tax returns. I do enjoy being a CPA. I've been doing CPA work for 35 years, and I still enjoy going to work, and I think that's important on finding a vocation, is finding something you enjoy doing. I first learned about accounting whenever my girlfriend in high school was taking an accounting class, and I was helping her with her homework, and I enjoyed some of the things that they were doing, writing checks and how they were entering them in and keeping track, and I enjoyed that. So the next year, my senior year, I took that same accounting class, and I really enjoyed it. So I knew after taking accounting in high school that that's what I wanted to do whenever I went to college. And so it's built upon something I enjoyed doing, and I still try to do the type of accounting services that I like. Some of the things that are pretty difficult, or preferably not as joyful, is whenever people try to get by with things on their income taxes just to reduce on the amount that they pay, when I know they're not true or the right amounts. A lot of times whenever I tell a business or a company that their tax liability, they'll say, oh, I have some other expenses, some other deductions to lower that. And so that's not always the fun part of knowing that people may be using me and my services in order to get by with lowering their tax liability, and so that's probably something that's not as fun as others, but typically that's usually not that often that I run across that. So.